Everyone, welcome back to another edition of Super Prime UK with your Super Prime valuation specialist, myself, Rob Cohen.
And myself, James Wild.
Hope you're well. Hope you enjoyed the super sunny summer bank holiday weekend. Hope all your travels have gone well and you've all been safe as we near to the autumn season. As the summer ends, we can only but hope for another Indian summer, and we just get a nice extension all the way to the end of September, and we can enjoy good weather and outside activities for as long as possible. In terms of the property market, the economy, all of the data and intel and updates, August historically, seasonally is a challenging month. Activity generally falls, and James will be updating us on that. I've been traveling, meeting clients, going into key markets, doing the norm, and over the next few weeks, lots of meetings and traveling all over the country, all over Europe planned as we head into the final quarter of the year soon and see where the world takes us. So, James, hope you're well.
Yeah, really good, thanks, Rob. Really good, thank you. And as we look back into the month of August, I think the first couple of weeks, Rob, it sort of started fairly bright, and the second half of August, I think some of the markets were a little bit quieter in terms of the sort of residential sales and activity. Just to bring you the data for the last week of August, the new instructions were slightly up on last week, so 275, pretty positive, just below the averages for the year. However, sales for this week, we're down at 106. Again, I'm not sure if that's a lot of people were away, just with the lead up to obviously the long weekend, Rob, with people possibly returning to work this week. Obviously a short week this week, but one working day less this week, so in terms of the days of the week, 20% less. However, in terms of the data, that's not always reflective. People sort of wrap up deals in a sort of shorter space of time, so we're going to have to see how that data is presented in the following weeks coming up.
Yep, I think September is going to be an interesting month, and it's going to be a true marker of where the market is sitting. Seasonally, historically, there is very strong activity towards the second or third week in September. Once people get back into their routines, once the schools go back, then that's the time that people think about putting their properties on the market. So be interesting to see if the historical trend continues this year.
That's it. Obviously, final month in Q3 as well. So as we sort of move towards the end of the year there, in terms of just keeping in terms of the data there, we've got Halifax's house price index. This is out next week, so we'll be able to bring you news there of what they're reporting has happened in the month of August. For now, Zoopla have released their data. They're saying that house prices have risen 8.3% over the course of the last 12 months, with first-time buyers being a little bit more prominent in terms of their data. The best performing regions are the South West and Wales. They're sort of jointly best performing, with the annual house price there around 10.6% growth. However, meanwhile in London, this is the worst performing region, actually, at 4.1% in terms of the annualised growth here in London. As I said, the first-time buyer market, according to Zoopla, remains very strong, just at sort of entry level there. The first-time buyers, they made up an increased proportion of buyers in terms of the first half of 2022, just up from last year, 35% this year compared with 32% in 2021. Rob, I think this is slightly more driven by, in terms of the first-time buyers, their flexibility possibly on where they can work. They can then move into areas of greater affordability, which might accelerate their route onto the property ladder. However, in terms of sort of first-time buyer patterns and behavioural patterns, we're going to have to see how that performs in the second half and the remaining quarter of 2022, as the higher cost of living and higher interest rates, how that affects that first-time buyer market as well.
Yeah, we talked about it a few times. data tells us that first-time buyers are active in the market and buying a large percentage of properties, which sometimes goes against the belief that the market doesn't allow for first-time buyers and there's a complete barrier to entry there. So I think the data tells us that isn't the case, and there is strong activity in that space.
That's it. We've also had the government's sort of slight intervention to the market. There are 95% government-backed mortgages, which could have just helped to creep up that proportion of first-time buyers. And Rob, in terms of Zoopla's at 8.3%, obviously, is there a story to be told amongst some of the other indices which we've been reporting over the last month or so?
Yeah, I think all of them have been sharing or reflecting a softening or a dampening in terms of growth, to which we do expect that trend to continue based on, I suppose, the affordability levels, interest rates, and so on. So I think there is a trend there, a very clear trend, whether it's Rightmove or Halifax or any of the others, of a dampening and softening of growth.
That's it. I think it's definitely sort of a holistic view there, like you say, Rob. Just coming down, we bring you news and data across a number of indices, from some of the more London-based indices to Halifax, nationwide, and even some of the asking price data, both from Zoopla and also Rightmove, just to give you guys a complete view of where the market is and where it's heading. Just to bring you some more property news in terms of what's happening in London, I think we'll start with the retail market, Rob. In terms of some sort of developments there, obviously the Mayor of London has given his approval the last week for the former ITV studios on the South Bank at Waterloo on upper ground SE1 for the redevelopment there. The approved plans have been on hold since earlier this year, when the then Levelling Up Secretary sort of called in the application under the Section 31, which did sort of at that time cast doubts over the proposals to develop up to 1 million square feet of office, retail, arts and cultural space, obviously home to the BFI, a very sort of cultural area on the South Bank there. In terms of the project, it's set to involve the demolition of the existing studios, Rob, in place of a 25-storey office building connected across 2 further blocks of 6 and 14 stories. The developments feature around 90,000 square feet of office space, as well as some cultural venues, 2 public squares, alongside some restaurants and retail space, just further adding to some of the existing offerings along the South Bank.
Great, James. More development that happens, the better, and hopefully that will continue in all aspects of commercial real estate and also residential, obviously. And the news that everyone wants to hear, what's happening in the mortgage market. I think it's everyone's favourite subject at the moment. Where are interest rates heading, and what's the market looking like?
Yeah, it's been a very sort of constrained mortgage market since the interest rates started to rise in obviously December 2021 last year. So in terms of the cost of borrowing, it's rising, Rob, at a very fast rate. The average 2-year fixed mortgage is now just under 4.1%, whilst the average 5-year fixed has also risen to 4.24%. 12 months ago, this was only 2.75%, Rob. So that is, almost doubling there in terms of the mortgage products on the market. And as you've spoken about, the lifespan of some of the mortgages which are available are shorter than ever. Banks, lenders, lending institutions having to react sort of quarterly to or less to some of these interest rate rises, which we're seeing. What we would say, Rob, the current landscape of the UK market, over 3/4 of borrowers are on the fixed rates at the moment. So the pain from some of those higher rates on offer at the moment is being spread over a longer period of time. As people sort of come off those fixed rates deals, they'll have to then move to lock in another 2 or 5 year fixed rate deal, or possibly move on to a tracker or a variable rate mortgage, depending on how they, what flexibility they want and what type of mortgage product they want to enrol themselves into. In terms of data, on the Monetary Policy Committee, the Bank of England, the MPC is due to meet on Thursday the 15th of September, Rob, so we'll put that in our diaries and see what the outcome is of their meeting, whereby they'll decide whether to freeze the base rate or further rise interest rates, of which the latter seemingly the more likely, with it being mooted by some analysts that we could see a further 0.5% rise in the base rate. Rob, given inflation is now, we had the inflation data, 10.1% now. This is expected to rise to around 13%. So another interest rate rise is almost inevitable, I feel.
Yeah, I've been speaking to quite a few banks and lenders in relation to that split and spread between fixed and variables, 3/4, 75 to 25 more or less. Ultimately, whether you're on a variable, whether you're on a fixed, you're going to pay the penalty. It's going to affect everyone because everyone's rates are going to change, whether you're on a 2, 3, 4, 5 year, it's going to catch up with everyone. And ultimately, the question is, are those levels of payment sustainable and affordable? And the clear answer to that is a no. So we're in a position here where something will have to change, and time is of the essence for the expiry, especially of those fixed terms. And that's probably the most interesting thing moving forward over the next 6 to 12 months is once that filters through to the market, then suddenly you're facing the reality of all of these interest rate hikes. And as you said, the next one is, next meeting's the 15th of September, and we'll probably have a show built around that.
Yeah, definitely. I mean, it's a very tricky one because obviously the main factor with inflation is obviously the rising energy costs, and it's just whether those interest rate rises will be able to then dampen that inflation, which obviously the energy price rises are a sort of external factor outside of the control of a lot of the UK, whereby a lot of its energy is obviously bought from overseas. So we'll have to watch this space in terms of the economic news, which we'll be able to bring you. Just in terms of some further news on the built environment here in London, there's a new government policy, Rob. The ministers have set out plans to sell off a further £1.5 billion of their sort of government buildings, reflecting plans to shrink the sort of London-based civil service, moving more officials out of London to more regional hubs. We know that the Bank of England has also sought to do this as well over the last couple of years, as well as sort of utilising that more versatile and hybrid working as a result of COVID-19. In reality, this is a very small portion, even though it sort of seems a huge amount of real estate, around £1.5 billion. It's only around 1% of the central government's estate, which is valued at about £150 billion, covering over 150 million square metres. As we sort of go back, some data there, over the last between the period 2015 to 2020, the government actually sold off around £5 billion of property. So it's not necessarily a new initiative. It's something that they had done over a number of years. It's just maybe in terms of their sort of rate they do it, it's maybe slightly up in the next 12 months or so. So we have to see which buildings they look to sell off there, whether it's for residential development or possibly selling some of their prime office buildings.
I mean, I only see that rate increasing. Government debt is growing. They need to fill some gaps and holes, and I think they're going to dig deep into that real estate pool and sell off more of the crown jewels?
Well, definitely. We know services such as TfL, big landowners, they've sold off a number of land, particularly in East London, over the last few years. Some of the prisons have been sold off for residential development. Rob, Holloway Prison, the ladies' prison, obviously got sold off a couple of years ago for residential development. So I think it's a sort of an evolving timepiece in terms of how they manage the government estate there.
Great. What else you got for us, James?
We've got a bit of data there in terms of the office space available in London. The amount of office space available to rent has increased by more than 50% since the start of the pandemic. This is somewhat above the level which we saw the previous financial crisis, 08-09. This is data according to the data company CoStar. I think that's a slight imbalance in terms of the office space. I think your sort of grade A and grade B office space is still in demand. It's that sort of makeup of more obsolete space which is really sort of lingering in the market. It is my take on that, Rob.
Yeah, I think that's the hardest market to follow and understand because it's a moving piece and because of everything we've been through, there are certain areas that are performing very well and others not. And you know, the increase of available space, as you've just said, might not just be the less prominent space. And I think that market is under scrutiny and we'll have to see how it performs.
I mean, that sort of secondary office space, some of it is within very old buildings, and the sort of cost-benefit analysis of sort of money spent versus the sort of uplift in rent doesn't necessarily then facilitate sort of that office space being regenerated into your sort of grade B, grade A office space.
Brilliant. Anything else for this week, James?
That's it for me.
Super exciting month ahead. September is going to bring around a new government, interest rate changes, further inflation, changing market conditions, and we're going to be here reporting on all of that. And I think it's going to be a critical month, James, September, of how 2022 is going to close out. Very key variables affecting specifically the UK economy, and we'll be reporting every week on that. Just to close out on a bit of sport, Premier League's kicked in. Some big transfers this week for United and Chelsea with the 70 million purchase of Fofana. What's your view on all of that record spending in the Premier League this summer?
Yeah, I mean, I think Chelsea definitely trying to sort of spend their way out of trouble after a dreadful start to the season. Obviously, 3-0 defeat to Leeds. They obviously losing to Southampton earlier this week. So they're obviously not in a good place. Thomas Tuchel under a lot of mounting pressure, especially from the new owners. Manchester United finding a little bit of form. Liverpool continues to be somewhat erratic in the table. Man City came from behind again to win 4-2 at the weekend. So quite a topsy-turvy season so far, and we're only 5-6 games in. Yeah,
it looks like City, Tottenham, Arsenal had good starts, promising starts, and everyone else is playing catch up. Let's see how things go.
As a congested fixture period as well, leading up to the World Cup in Qatar. So squeezing in midweek fixtures where possible. Because I think the season is going to be closing down in about mid-November, Rob, I believe.
Yeah, that'll be it for the Qatar World Cup. That's going to be interesting and going to change the whole dynamic. Your favourite stat? Let's go into the Fantasy League. Harry Kane has produced in the month of August. I said he would, and you were a bit unsure about it, but he has come up with the goods, and his August record of not producing is now a thing of the past.
Yeah, I mean, previously, I can't remember if he'd had one goal previously in August, but no, he's had a strong start. Spurs as a whole, a strong start. They haven't spent sort of particularly big in the transfer market, Spurs, but Conte doing an excellent job there, really steadied the ship. So Richarlison, we're yet to see the best of him and him being fully integrated to the team. So I think that'll be an interesting one to see. Just
last bit of sport for this week. I know a lot of people who watch and listen do love our sport engagement. Disappointing US Open for Raducanu. A year ago, we were celebrating, embracing the miracle of her victory. And across all of our shows a year ago, which was a 3-week period because she was a qualifier, we were embracing the feel-good factor around that. This year it's a first round exit and defeat. And where does she go from here?
Well, she obviously had the win against Serena Williams a few weeks back, but it just feels like her sort of performance levels are just so variable. She's obviously still at a very young age, but like I said, Rob, she's sort of capable of beating anyone in a day, but at the same time has these sort of surprise losses. I think that's something of maybe inexperience. She's changed her coaching team a few times in the last year, so we're going to have to see if that helps her sort of mentally almost, isn't it? Just managing her. I don't know if it's sort of a mental state, the sort of her physical conditioning going into the matches.
Yeah.
We have to see her performance over the next 12 months.
We will be following that. Thanks for all your support, everyone. Thanks for all your engagement on the socials. Brilliant numbers on the podcast. If you haven't downloaded it, please do. Brilliant numbers on YouTube as well. Thousands of you watching, listening, following every week. We really do appreciate it. We wouldn't be here without you. If you don't have the data newsletter updates every week, please subscribe or DM me personally, and we will make sure we get you that UK data and the European data. I know some of the banks and lenders we're working with now are on top of the quarterly Euro data that we're now providing. So make sure you get hold of that brilliant data there. And if you don't have it, reach out to us and we'll get it to you. Look after yourself, take care, be positive, and we'll be back with you next week with the latest Super Prime updates. Thanks, James.
Thanks, Rob. Thanks very much, everyone.